Hey, what's up everyone? I'm Anthony and welcome to my channel. Today I'm going to talk about my MPF portfolio. Yes, the Mandatory Provident Fund. And guess what? It's actually grown by over 60% in just the past 3 years. Crazy, right? So let me walk you through the details of my portfolio and the little secret behind how I pulled that off. Under the Manulife Global Select MPF scheme, my portfolio delivered a total return of about 60.9% from 2023 through 2025. Meanwhile, the overall market MPFR index only went up by about 31.5%. On an annualized basis, that's roughly 17.2% per year for me compared to just 9.6% for the benchmark index. So yeah, after 3 solid years averaging that 17.2%, my pension portfolio has grown a lot. Just look at this chart. My MPF portfolio jumped from about 568,000 Hong Kong dollars back in early 2023 to over a million quid by the end of December 2025. And trust me, this isn't just luck or riding some random market waves. It's all about intentional allocations and staying disciplined with portfolio monitoring, which I'm going to show you right now. At a high level, my portfolio had heavy exposure to US equities in 2023 and 2024, which was the key performance driver. Then I switched things up and made China equities the focus asset class in 2025. All these moves really laid foundations for smashing the average MPF returns. Alright, then let's zoom in year by year, starting with 2023. In 2023, I had about 39% in the North American Equity Fund and another 30% in the US-centric Core Accumulation Fund. Boom! That allocation caught a massive S&P 500 surge, and my portfolio returned 16.6%, way ahead of the benchmark index. Then in 2024, I doubled down on US equities, bumped the North American Equity Fund up to 55%, and made some moderate exposure to Japan equity and China value funds. And the result? Another strong 16.4% return, again beating the market. Now 2025, this was my boldest move yet. I ramped up the China value fund to over 40%, caught that China rally, plus some solid gains from the US and Japan, and I ended up with an impressive 18.5% return. Looking back over the 3 years, that dramatic shift from US heavy to China heavy turned the potential risks into serious rewards. But here is the real key. Track everything monthly. That's how I spot trends early, and honestly, it's a game changer. Now let's check out this table. You can see the ups and downs, like that sweet 8.8% gain in January 2023 and other months where I outperformed. In 2023, for example, I beat the index in 7 months, and 2024, 8 months, and 2025, another 7. That's a pretty high hit rate. So no surprise that the portfolio crushed the MPF average over 3 years. And it's not just about returns. Every month, I review my fund allocations, see how they've shifted with market moves, and decide what tweaks I need. For example, back in August 2025, I boosted the China Value Fund by 5 percentage points to 40%. And at the same time, I dialed down the North American Equity Fund by 5 percentage points, kept everything aligned with the trends, like China's upswing, and helped maintain that outperformance. Alright, that wraps up part 1 of this case study. Heads up though, the next episode is going to be very technical. We're diving deep into the numbers, the Excel template that I use for monthly tracking, how I analyze fund allocation changes and performance metrics, my core rebalancing strategy, and even my overall investment philosophy. Expect spreadsheets, formulas, step-by-step breakdowns, the real nitty-gritty that makes consistent outperformance possible. If you're into details and ready to level up your own MPF game, stay tuned.